In this video we are going to talk about the top 5 industries to invest in for future. So before starting this video, like this video and subscribe to our YouTube channel for future updates. Do your homework to comprehend the company environment and market landscape before investing or entering any industry. Additionally, think about your own qualifications or those of the executives of the business you're thinking about investing in. Analyze the purchase patterns, distribution methods, and competitors or other industry participants in great detail. Utilize a variety of tools when conducting market research to help you develop a thorough grasp of a sector. Trade associations, online sources, governmental advice, neighborhood associations, banking institutions, and other service providers are a few examples. Here are the top 5 industries to invest in for the future. Number 5. Electric vehicle, EV. Electric vehicles, EVs, were formerly thought to be an idea for the far future. However, technological and environmental trends have made the EV market one of the fastest growing industries, behind the transportation, logistics, and technology sectors. Global passenger EV sales reached 6.6 million in 2021, more than doubling and tripling those of 2020 and 2019. EV sales have increased significantly, although they still account for only about 9% of all vehicle sales. The EV market may offer an appealing long-term investment opportunity because the International Energy Agency, IEA, anticipates that as net zero emissions initiatives are implemented, global market share could increase to 61% by 2030. Consumers' availability to charging facilities and high price points traditionally restricted the uptake of passenger EVs. However, in the last 5 years, electric vehicles have become more common and are no longer just used for luxury purposes. One of the most important turning points was the 2017 launch of the Tesla Model 3, TSLA, which carried the luxury EV name brand but was priced more competitively with conventional internal combustion engine, IC, automobiles. This was half as expensive as the more expensive Tesla Model S, which started at just under $70,000, with a base price of $35,000. After the Model 3's debut, US EV sales increased by 85% over 2017 levels in 2018. The Model 3 accounted for 39% of 2018 sales, and they have since continued to rise. Cheaper lithium-ion battery packs, which price fell by 89% between 2010 and 2020, have also helped to support lower price points. Vehicles can travel farther between charges when EV batteries develop more technologically. In 2021, the greatest range of an EV was 405 miles, with a median range of 234 miles, nearly 3.5 times greater than the median range 10 years prior, over 4x the maximum range 10 years ago. Additionally, there are now much more public charging outlets available. Future was developed to symbolize the world of electric and future vehicles. The makers of electric and autonomous vehicles, supporting technology, and enabling materials make up the 3 main business groups that make up the index. The manufacturing sector of the index exposes investors to both big and small automakers who make both IC and EVs, as well as to tiny EV-only producers. Companies that run charge stations, make batteries, semiconductors, or other autonomous technology are examples of enabling technologies. Last but not least, the index offers some exposure to businesses that extract rare earth minerals used in battery components. Number 4. Battery for an EV. Rare earth mineral lithium is a crucial component of the battery industry. Although battery technology has existed since the early 1800s, early materials were extremely combustible and hazardous. A lighter, more durable, rechargeable battery with a substantially higher capacity is made possible by lithium-ion technology, which uses lithium as the cathode. These considerations led to the rapid adoption of lithium-ion batteries as the preferred battery for electric cars, or EVs. And the need for these batteries has multiplied. According to a 2022 McKinsey research, EV sales increased by 50% in 2020, which caused lithium prices to soar by 550%. Expect this tendency to continue given that the demand for lithium was only about 500,000 tons in 2021 but is anticipated to increase to 3 to 4 million metric tons by 2030. Investors who want to profit from lithium's explosive growth must look at mining firms, because lithium is not traded as a commodity by itself. Investors should be aware that mining, particularly for lithium, frequently harms the local ecosystem in terms of habitat destruction, water contamination, and waste creation in addition to operating costs. Due to these factors, local ranchers and indigenous groups have been pushing for a complete closure of the LAC mine. Although the Nevada government just gave the project the go-ahead to proceed, the mine still faces vehement opposition. Alternative mining techniques could be cleaner. Companies are attempting to start lithium extraction, for instance, close to the Salton Sea by extracting lithium from naturally existing steam that is also used to generate geothermal energy. Since the steam is generated naturally, this process wouldn't deplete the available water supplies and could remove the mineral in a matter of hours. Although not commercially viable, the Salton Sea holds a lot of potential. Number 3. Artificial intelligence, AI. Industries ranging from infrastructure and telecommunications to education and music are being transformed by the rise of artificial intelligence and automation. According to Markets and Markets, the global artificial intelligence (AI) market is anticipated to grow at a CAGR of 39.7% and reach $309.6 billion by 2026. AI applications range from natural language processing and neural networks to machine learning and predictive analytics. Numerous industries, including but not limited to logistics and delivery, customer relationship management, data analytics, marketing, human resources, and manufacturing, stand to be impacted by the rise of AI. There are many ways to get started with AI. Autonomous vehicles, robotic process automation, virtual reality, chatbots, and payment services are just a few examples of product development prospects. Starting firms or making investments in rapidly advancing breakthrough technologies are always fraught with greater risk. Examples of important concerns about various AI-driven technologies include security, privacy, and ethical issues. These concerns will change as the sector matures. Be ready to remain flexible and nimble in the face of market and regulatory challenges. Number 2. Space. A new frontier of financial opportunities that could yield cosmic rewards has been made possible by the rush to enter space. Although it is difficult to imagine, fields like space tourism and hypersonic transcontinental travel may soon become a reality due to the high level of public and private interest and the rapid speed of innovation. According to Morgan Stanley, the global space business might generate $1 trillion in sales by 2040, up from $350 billion now, and 186% rise. The industry may also reach new heights as a result of potential advancements in the fields of aerospace and military, satellite broadband internet, telephony, and high-speed cargo transportation. Technology developments and industrial improvements over the past 10 years have redefined what was previously solely considered to be fantasy. The tech sector is poised for a significant change, involving everything from driverless automobiles to artificial intelligence, AI. And the space sector is no exception. The National Aeronautics and Space Administration, NASA, spends an average of $152 million on each launch, according to estimates from 2018. However, for a much lower price, private companies like Elon Musk's SpaceX have created spacecraft that can travel to orbit. For instance, the cost to launch SpaceX's Falcon 9, a reusable rocket, is pegged at about $30 million. Long-term opportunities are provided by investing in space. Since the majority of space enterprises are private, this niche market segment is still somewhat uncrowded, with only a few players open to the general public. Like any thematic investment, there are a lot of hazards to be aware of. Number 1. Cryptocurrency. By investing in cryptocurrencies, it is possible to become obscenely wealthy, but it's also extremely conceivable to lose all of your money. Although investing in cryptocurrency is dangerous, it may also be profitable if done correctly and as a part of a balanced portfolio. If you want to have direct exposure to the demand for digital currency, investing in cryptocurrency is an excellent idea. Purchasing the stocks of businesses exposed to cryptocurrencies is a more secure but possibly less rewarding solution. Cryptocurrency storage on a centralized exchange implies a lack of complete control over your holdings. You might not have any options to get your money back if an exchange goes bankrupt or freezes your assets in response to a government request. Although cold storage has its own set of difficulties, some cryptocurrency owners choose offline cold storage options such as hardware wallets. The risk of losing your private key is the greatest because you can't access your cryptocurrency without it. Furthermore, there is no assurance that a cryptocurrency project you fund will be profitable. Thousands of blockchain projects are in intense competition, and many of them are nothing more than frauds. The majority of cryptocurrency initiatives won't succeed in the end. Many cryptocurrencies, like Bitcoin and Ethereum, are introduced with high goals that might be accomplished over very lengthy time horizons. Even while the success of any cryptocurrency project cannot be guaranteed, early investors in a project that achieves its objectives could reap significant long-term rewards. Due to the fact that the quantity of Bitcoin is set, as opposed to the supply of fiat currencies like the US dollar or Japanese yen, investors believe that the cryptocurrency will increase in value over time. While other currencies can be minted at the whim of central bankers, the quantity of Bitcoin is restricted to fewer than 21 million coins. Many investors anticipate that when fiat currencies decline, Bitcoin will increase in value. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.